There is a silent heist happening right now, and by the time 2026 rolls around, it'll be over. You felt it at the grocery store. You felt it looking at house prices. But what's coming next isn't a crash, it's a great split. In 2026, you will either own the robots or you will compete with them. You will either own the scarcity or you will be owned by the debt. Which side are you on? Listen, I've been in this game for 30 years. I traded through the dot-com bubble when everyone thought the internet was a toy. I saw the housing cards collapse in 2008 when everyone said real estate only goes up. But looking at the charts for 2026, I'm seeing a setup I haven't seen in decades. Most people are waiting for interest rates to drop back to zero. They're waiting for 2019 to come back. I'm here to tell you, 2019 is gone. It's never coming back. The rules of money are being rewritten in real time. We are entering a period of stagflation light, massive technological displacement, and a complete overhaul of the financial plumbing. Today, I'm giving you the Midas Outlook. 3 specific trends that will dictate who gets rich and who gets left behind in 2026. Trend number 1 is the shift from generative AI to agentic AI. In 2024 and 2025, we had chatbots. You typed a prompt, it gave you a text. Cute. But 2026 is the year of the agent. Here is the difference. A chatbot talks about work. An agent does the work. We are seeing software that doesn't just write the email, it sends it, books the meeting, negotiates the invoice, and balances the ledger. Why does this matter for your wallet? Because the middle manager economy is effectively over. If your job involves staring at a spreadsheet and moving data from column A to column B, you are in the blast radius. But here is the wealth angle. And this is what the smart money is doing. They aren't just buying Nvidia stock anymore. That trade is crowded. They are buying the infrastructure of this new economy. They are looking at energy. Think about it. These AI agents are hungry. They eat electricity. Data centers are projected to consume massive chunks of the US power grid by 2026. The next oil boom isn't oil, it's copper, uranium, and grid infrastructure. The Midas move? Stop trying to pick the winning AI software company. That's a casino. Instead, own the power plant that keeps the casino lights on. If you aren't invested in the physical constraints of the digital world, energy and raw materials, you are missing the biggest leg of this bull run. Trend number 2. Let's talk about the elephant in the room. The debt. By 2026, the U.S. national debt will be pushing deeper into the mid-30 trillions. The interest payments alone on that debt are now costing more than our entire defense budget. Now the Federal Reserve will tell you they have inflation under control. Don't listen to what they say. Watch what they do. They cannot afford to let interest rates stay high forever because it would bankrupt the government. But they can't print money without causing inflation. So what happens in 2026? We get financial repression. They will likely keep inflation running hot, maybe 3% or 4%, while telling you it's 2%. This is how they inflate away the debt. It's an invisible tax on your savings account. If you are holding cash in 2026, you are the exit liquidity. You are the sucker at the poker table. We are seeing a K-shaped recovery on steroids. The top of the K, people who own assets, are flying high because inflation pushes asset prices up. The bottom of the K, people who work for wages, are getting crushed because their paycheck can't keep up with the grocery bill. The Midas move? You need hard assets. Assets that the government cannot print. I'm talking about gold, which is hitting new highs for a reason. I'm talking about scarce real estate. And yes, I'm talking about Bitcoin. In a world of infinite paper money, finite assets are the only life raft. Finally, trend number 3. This is the sleeper hit. This is where the biggest asymmetric bets are right now. It's called RWA, Real World Assets. For the last 10 years, crypto was mostly speculation. Dog coins and pictures of monkeys. But the big boys, BlackRock, JP Morgan, Franklin Templeton, they've been building something else in the background. By 2026, We are going to see the tokenization of everything. Imagine owning a fraction of a Manhattan skyscraper the same way you own a share of Apple. Imagine selling a fraction of your house instantly on a Saturday night to raise cash, without a bank, without a 30-day closing period. Wall Street loves this because it cuts out the paperwork and settles trades instantly. They call it operational efficiency. I call it the biggest migration of wealth in history. Trillions of dollars of stocks, bonds, and real estate are moving onto the blockchain. The Midas move? Look for the protocols that are building the bridges, the Layer 1 blockchains that the banks are actually using to move these assets. We aren't looking for the next meme coin pump. We are looking for the digital railways of the 2026 economy. So, let's bring it home. 2026 is going to be a volatile year. We have an energy-hungry AI revolution clashing with a massive sovereign debt crisis. The middle class is being squeezed out. The safe path of saving 10% of your salary in a savings account is mathematically broken. It guarantees you lose purchasing power. You have to take risks, but they have to be calculated risks. Own the energy, the AI pick shovel. Own the scarcity, gold, Bitcoin to fight the debt. Own the rails, the blockchains moving real-world assets. Don't let the headlines scare you. Chaos is a ladder, but you have to be standing on the right rungs. If you want to know exactly which 3 energy stocks I'm watching for this 2026 boom, hit that subscribe button. I'm doing a deep dive on them in the next video. Don't miss it.